Welcome back to the Exchange. Rounding out a big week of earnings with three consumer-facing names. We got the action, the story, and the trade in our earnings exchange. Starting with Ford, the automaker up 25% this year, but facing a lot of headwinds. Tough rollout of the electric F-150, leading to price cuts there. Labor negotiations looming this fall, and of course, fears of a weakening consumer. Boris Schlossberg has the trades today. He's BK Asset Management Managing Director and a CNBC contributor. Boris, welcome. What do you think of Ford?
I think, there's definitely a lot of reason for why there's so much angst against Ford right now, because the EV rollout has really not gone as fast or as smoothly as they hoped. Some of the figures I heard reported is that it costs them as much as $65,000 per unit of loss until they get up to scale on the EV side. And of course, all of their plans really rest on the F-150, the Ford Lightning, the EV version, really becoming a flagship model. So that's going to be the big key tell going forward. And I think, a lot of it really depends on the consumer, because right now, basically, Ford Blue, the ICE part of it, and Ford Credit is what's really financing all of this investment into EVs. And they need a very strong consumer, very strong demand for all of their regular vehicles for the next year going forward before they can really show some operational changes in the company. So to me, this is very much kind of a belt and suspender type of a stock. I would not want to own the stock unless I could buy a put and maybe sell a call a little bit of ahead of it to finance it, because I do think there's a lot of risk here, especially the UAE negotiation with the auto workers could be a very, very big problem for them if it doesn't go smoothly. So yeah, I think it definitely merits some worry here.
That sounds like a stay away for now. Let's go on to Exxon. Shares are down 4% this year as the energy sector lags following its 2 years at the top. Analysts expect Exxon's earnings to fall by about 50%, roughly mirroring Chevron's pre-announcement earlier this week. We'll also be watching for guidance and commentary on prices, demand, and its acquisition of Denbury. Boris, your thoughts now on Exxon.
So I think long-term, this is a great hold. And basically, if you're looking at the oil market, of course, obviously Exxon is going to see some drawback because of oil went down. But oil is pretty much stabilized, and it's pretty realistic to think that we're now in a 65, 85 range, which is very good for producers because, first of all, they have understanding of cash flows, they have an understanding of market going forward, and I think the fact that Exxon, of course, is such a dominant force in the sector, I think it's $400 billion, operations everywhere in the globe, is going to keep it very much at the forefront. It's a dividend aristocrat, 3.5% yield. I really like the stock to maybe 120 over the next 6 months. There's a couple of possible wild cards here that could really play its way. For example, in the Ukraine war, if there's some kind of a vacuum leadership in Russia, that's certainly going to create a lot of turmoil in the oil market. If we have a very cold winter with natural gas in Europe, that could also help the energy producers. So to me, there's upside for them quite a lot, and the downside is really capped at this point.
All right, Boris, let's move on now and finish up with Roku, up nearly 80% this year, but still well off those 2021 highs. The company expected to report a loss, but with Meta's positive commentary yesterday on ad revenue, there could be some hope here. But remember, the media industry is dealing with strikes, ballooning costs, and those will be a key factor for Roku and its profitability as we move forward. Your thoughts on Roku?
So Roku, I think, is an extremely interesting idea. You almost have to look at it as a venture capital investment. If you're not willing to lose half, you really can't touch the stock because, as you said, it has no earnings, and it's a very speculative play. It is definitely the darling of ARK because of its interesting technology. It's basically trying to do something unique in the streaming space. It wants to make shopping he wants to make ads shoppable, which is something that nobody has ever been able to do. And if they can achieve that, that could really revolutionize the whole business. Basically, I think the metric that everybody's going to be looking at is something called monetization per hour. Right now, it's pretty much factored in around 3 pennies per hour. And if they can get it up to 10 pennies per hour by 2026, it could be massive, massive revenue run for them. So the estimates are anywhere from $4 billion on the bearish side to $30 billion on the uber bullish side. That's why it has a huge such upside potential.
Making ads shoppable would mean something like seeing an ad for Skechers and being able to buy it with my clicker.
On the spot. And of course, it creates impulse shopping. It creates a whole new interesting that just basically takes ads from being just a persuasion medium to being a transactional medium. If they can succeed, I think, the sky is the limit here. But that's a big if, and that's what everybody's going to do.
A holy grail for media companies, indeed. Boris Schlossberg, thank you, sir. Appreciate it.